Infinite banking is not life insurance. Life insurance is not infinite banking. Remove pizza from box before placing in oven. Take burrito out of the microwave pouch before eating. You know, I've actually seen several statements such as those that are now being printed on the packaging of real products. Have you? Reminds me of George Carlin's statement. When you realize that the average person is really stupid, it's just frightening to think that half of the people are stupider than that. Now, that is not directed at you by any means. I already know that you are smarter than average just based on the fact that you are researching infinite banking and or life insurance. Anyway, the reason why I even mention all this craziness is because one of the major insurance companies recently issued a memo to their associates that stated, in part, using strategies that position whole life insurance as a personal banking or similar concept often are misleading to customers by positioning the policy as a checking, savings, or retirement vehicle and something other than life insurance. Now, I realize that life insurance is a bit more, well, complicated and less understood than, say, eating a pizza or burrito, but I really don't see how anyone could possibly get past the fact that life insurance is life insurance. I mean, after all, you don't have to have any kind of medical exam or answer any questions about your medical history in order to open a bank account, right? In fact, you don't even have to have any kind of medical exam or answer medical history questions to buy an annuity, which is a type of insurance issued by life insurance companies. You don't have to have a beneficiary to open a bank account either, but you do have to have an abbreviated medical exam, answer medical history questions, and you have to name at least one beneficiary in order to purchase a life insurance policy. Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Free Thinkers Academy, a nonprofit financial literacy education organization. For the past several years, I have focused on and specialized in the infinite banking concept and the tax-free cash growth warehouse finance strategy. I realize that most people are not familiar with the infinite banking concept and as a result could be taken advantage of. I also realize that it is true that there are some insurance salespeople, unfortunately, who will do anything to make a sale, including lie, or as one saying goes, if you can't impress by your knowledge of facts, baffle them with BS. That's why I have personally posted some videos specifically for the purpose of helping people protect themselves from being misled into buying something that is not suited to the infinite banking strategy. I have to believe that by far, the majority of those who are presenting clients with the infinite banking concept or IBC or bank on yourself or family banking system or cash flow banking, etc., are taking care to do so with the fiduciary mindset of putting the client's welfare first and with a high level of integrity. But because there are some out there who don't care about anything except increasing their own personal bank accounts, the buyer must beware. So there are a few things you, the prospective infinite banking concept practicer, must fully understand. Life insurance is not infinite banking, and infinite banking is not life insurance. Infinite banking is a financing strategy that utilizes the cash value of whole life insurance. A life insurance in general is a product designed to protect the financial welfare and security of the beneficiaries of the insured person when they die. That is true of term life, universal life, which is really a hybrid term life, and whole life insurance. The only life insurance that provides the best vehicle for infinite banking is participating whole life. Whole life insurance is a valuable asset. It is designed to provide financial protection and security for the beneficiaries of the insured. But it also provides a cash value component that grows at a guaranteed rate, tax-free, which the policy owner may access without tax liability. And the owner of whole life insurance gains equity in the policy as they pay the premiums. That is not the case with term or universal life policies. And that cash value component is protected against any outside influences and is therefore very secure. The difference between whole life and participating whole life is that the participating variety of whole life policies are offered by mutual companies and receive dividends on top of the guaranteed interest that is paid to all whole life policies. Now, infinite banking is a finance strategy that takes advantage of the many benefits afforded by the cash value of whole life insurance. We have a few other videos here on this channel where I talk about how not to get scammed by irresponsible or dishonest salespeople when you're looking to get into infinite banking, and others where I talk about the necessary aspects of a policy for use of the infinite banking concept. So what's coming next may be a review for you if you have seen those videos. But again, due to the complexity of life insurance in general, it's not a bad idea to go ahead and hear it again. So here are the main factors you need to know in order to be able to make an informed decision as to whether the person you're talking to is really looking out for your best interests and in fact knows how to help you with the infinite banking strategy. First of all, infinite banking is not a standalone account. It is a strategy that uses the cash value of whole life insurance. For maximum benefit and utility of the infinite banking finance strategy, the policy itself should be a participating whole life with a mutual company. It must be designed properly with the cash value contributing riders in the correct ratios to provide the most cash value and accessibility. The riders have different names with different companies, but a knowledgeable and experienced infinite banking expert will know what those riders are and how to properly design a policy for use of the strategy. Again, for the maximum advantage to you, the client, the issuing company should have a non-direct recognition loan policy, and the loan interest rate should be no greater than the dividend interest rate paid to the policy cash value. Even though the loan interest rate is simple interest and the dividend interest rate is compounding, you still want the loan interest rate to be no higher than and preferably lower than the dividend interest rate. Remember, term insurance has no cash value, so is absolutely useless for infinite banking. Universal life, regardless if it's index variable or guaranteed, is a term hybrid and also not good for infinite banking. While straight whole life will work for infinite banking, for you to get the maximum value from it, your policy needs to be designed with riders that contribute to the cash value and in the right ratios to the base whole life policy. You have questions, and they need to be answered. I can help you. You can watch our free on-demand webinar on this channel or request our book, 100 Tax-Free Cash Growth Warehouse, The 178-Year-Old Secret at the links provided below. And you can book a free consultation on my Calendly page. That link is also below. Don't be misled. Don't be scammed. We're here to help, and we look forward to helping you. For now, aloha and mahalo for watching.